The last question we have to ask is about budget. So the question here, we want to know before we get into it, what budget range that they're able to work with, okay? Yeah. I don't want to find out the broke like 20 minutes later, right? I want them to say yes to a price range. Again, all of this happens in like 15 minutes or less, right?
I love how you asked this, by the way. This is good. It makes you pay attention to this piece. He does a really good job of this.
So here's how the script goes. So Cody, here's my final question to you, and it's about price. 9 out of 10 people that I see, Cody, are on a fixed income. They get one check a month, whether it's Social Security or disability, and they got to live on that check. And the last thing that you want to do is spend more money than what you make, or spend too much on a life insurance policy you can't afford. What's the point? Here in Missouri, a couple months it's going to be snowing and going to be cold. You can't afford the heat bill. Why would you take out a plan you can't afford because your budget changes, right? The best policy to have is the one that's there when you die, right? Because that's the only one to have, and that's the one that easily fits your budget. So this is my question to you. If I can qualify you for a program today, can you afford somewhere between $150 and $200 a month?
No.
And that's fine. The good news is I've got other programs available for you. So what if I can find you a different program and it's somewhere between $100 and $125 a month?
That's still probably a little high.
Too high? Again, not a problem. So let's look a little bit lower. What if we can find you a different program that was between $75 and $100?
I could probably do something like that.
So when you say probably, is that like you're sure you can do 75 to 100, or do you want to go look a little lower?
Maybe a little lower.
How about 50 to 75? Can we do that?
Yes.
Perfect.
I love that you clarified the probably too.
Yes.
Probably.
Yes.
Probably. Because you'll get that.
Probably. I can afford that after I pay my, washer and dryer off in the next 12 months. Correct. It's like, that's not why I'm here.
Yes.
From a year from now, I'm here today. You're here to sell policy today, so you need total confirmation. So the way I say it is, if you hear anything other than a yes, it's a no. Maybe, probably, I think I can. Anytime you hear that, you want to say, okay, when you say you think you can, are you sure 100% that you can afford it? And if they say, well, depends on when I pay my bills, okay, fine, let's go lower. Again, I never argue with the client. I don't care if I get a big policy or not. I know I'll get them doing enough activity, right? Mm-hmm. But if I just serve the client and find something that's easily affordable for the budget, they'll buy from me.
Yeah.
It's all about aptivity.
Yes.
Closed deals, no matter the size.
Yes.
The money takes care of itself if you do right by your clients.
What if they say under 50?
Under $50 a
you
month?
Just keep going down?
I'll keep going. I'll do $10 a month.
Okay.
I don't care.
Cool.
Money's money.
Yeah.
And coverage is coverage. So
it does still help their family.
It does.
More than zero does.
That's right. Something's better than nothing,
as
we say down the South.
Yeah, that's right. And Chattanooga.
Right, Chattanooga. Now, when we've gotten the client to agree they have need, want, bank, that they'll let us draft, health, and budget, what do we have?
Yeah, you've got it.
We've got what?
What you need.
You got a qualified prospect.
Yeah.
The rest of the presentation should be pretty simple. It's like a downward slide.
That makes a lot of sense to check those off. Make sure, okay, this is someone that can actually qualify.
Yeah. And the rest is pretty simple because you've got them hooked. Remember, you did a really good pre-qualifying process. They know they need it. They feel understood. They kind of have clarity what they want to accomplish. You've also talked about, the health, that they've got a pulse. That's the easiest part of the pre-qualifying section.
Yeah.
And then bank the budget, right? So the rest is pretty simple. You just need to explain how your product's better than the others. And what we do in our presentation is just basically segment by describing the big, well-known brands and their shortcomings. Can I say those on here?
Sure.
Okay. So I usually start by saying, okay, so now we got that out of the way. I want to talk to you more about how our programs work. And I think the best way to do this is by describing how others work so you can better understand how ours is the best option for you. Make sense? Mm-hmm. Perfect. So the first kind of program you can get is called term life insurance. Have you heard of term before?
Yes.
So AARP, Globe Life, how haven't you heard of them? They just send you junk mail all the time, right?
True.
So here's the thing with term, and this is with any kind of term. And if you remember one thing, it's this from this conversation today. Term terminates. Term terminates. So you know what that means?
Yes.
You get your plan. That's term. It's great. It covers until you outlive it. and then you have no coverage whatsoever. So take a look at this. Again, showing and telling. I actually show them a brochure from AARP or Globe Life, and I'll say, you see right there, see how it says level term to 80? And it's like, don't believe me, read this. This is their own stuff, right? And that term to 80.
That's strong.
Yeah, and one thing I picked this up from an agent. I have to mention this. This is really good too. I used to read it to him and just show it to him. Then I listened to this. I think Christine was her name, agent. She said what she started doing. She started giving it to him. And said, "Read that to me. What it says."
Then they're saying it.
Yes,
That's
I was like,
good.
"Oh, that's awesome. That's powerful."
That is awesome.
So tell me what that says. The premiums with this plan are in 5-year level rates and go until age 80 when they cancel. And they kind of read it and they're like confused. And I said, "What does that mean, Mr. Prospect? It means this cancels at 80?" Yeah. So you can pay on this thing, pay on this thing, get past 80, keel over and die the next day. You will not be covered. Your loved ones do not have protection. What do you think about that?
No bueno.
Yeah, that's basically what they say. Usually a few more choice words. This is garbage, trash. Glad I always threw it away is kind of the things they say. And I say, hey, that's exactly right. Why would you want a plan that's not going to be there when you need it? What's the point of having insurance?
But you said that at the beginning of the appointment too, yeah.
Yes. So this is not a plan I recommend because we don't know what the future holds, right? And then to add insult to injury, the price goes up every 5 years. And you may get to a point where you can't even afford it anymore. And sometimes I'll seg you and I'll say about a client of mine that was paying $50 a month at 75, and when she turned 76, it went up to 140. She made $800 a month in disability, had to choose between this, prescriptions, and a rent. And that's the reality of fixed income seniors.
True. And
every senior fears that idea that they got to move back in with their daughter or they got to scrounge for money like that. So that's really important to share those stories if you've got them.
Yes.
So I've isolated out term as an option. Sometimes I'll even say another thing I'll add to that. I'll say, hey, one of the good things about term, and we call this a damaging admission in sales. This is where you as a salesman admit something about a competitor is good, but you spin it in a way that shows where it's actually bad. So I'll say, hey, one of the good things about AARP is that they have a low price. It's cheap, but you get what you pay for, right, Mr. Prospect? All right, so it starts cheap, but then it keeps going up and up and up till you can't afford it, and then if you outlive it, it's gone. So sometimes I'll integrate that into.
That's good.
So term terminates, rates go up. Not a good choice if you need permanent lifetime protection. So the second option you have is what's called guaranteed acceptance coverage. Probably seen those commercials with Colonial Penn on there. The old Jeopardy guy used to do those. You remember those? Everybody's like, yeah, I remember.
Yeah.
So those are what's called guaranteed acceptance programs. And like the commercial says, they don't require you to answer any health questions. All you got to do is fill the application out, send it back in, and you're approved for quality coverage, they say. Well, what's the catch? There's always a catch. So here, Mr. Jones, take a look at this. This is a brochure from Colonial Penn. Read that right there, what it says. Again, get them to read it. They say, what does it say? The coverage is full coverage after the first 2 years of only non-accidental coverage. Or only accidental coverage the first 2 years. And I'll ask them, what does that mean? Well, there's no coverage for the first 2 years if you die by natural causes, which is the most common form of kicking the bucket, right?
Yes.
Very rarely do people die from accidental coverage. So what's the point there? And why is that bad? Well, just like it's a risk taking out term insurance where you could outlive it, if you pick this plan, when you could get other plans that are better, what if you died suddenly, had a heart attack, got pancreatic cancer and died? You probably know people who were healthy one day and dead the next, right? And they'll usually say, yeah, that's right. So this program, damaging admission, this is a perfect program if you have 9 toes in the grave. That's not you. Yeah, you've had a few health issues here and there, but you're otherwise in pretty good shape. And then what leads me to what I do and how my program works. Again, part of this off script presumes that they're first day full coverage, right?
Yeah.
I'll say it a little differently, just as a side note. I won't go too deep into it. But if they're actually guaranteed acceptance qualified, like they have oxygen, COPD, they're smoking all at the same time, they're not going anywhere other than a guaranteed acceptance plan that we have. So I'll pitch that as the best option, which it truly is. I'll say, hey, you should be thankful anybody will touch you with your health issues. Most won't even do it with all these. And so I'll paint it in a better light, of course. But back to the final phase here. I tell them what we do. So now let me tell you how my plan works. I do what's called final expense whole life insurance. It's very simple to understand, and it's very good. So let me explain it to you. First of all, it's day one 100% coverage. Because your health qualifies, you can get fully covered from the first payment date. So there's no worries, Mr. Prospect. Like, what if your grandpa had one of those guaranteed acceptance plans and died in the first 2 years? You do not have to worry about that whatsoever. It's as certain as the sunrise. And the second benefit is the premiums never increase. So what I'm going to show you in that price range you gave me are premiums that never go up, period, under any circumstances. You just pay your premiums. You will always have your coverage. And last but not least, this plan cannot cancel due to age or health. You can never outlive it as long as you pay your premiums. That's the catch. Yes. And you're never in a situation where you get that dreaded cancellation letter from the company because you had a term plan. So long story short, if you're looking for peace of mind and you want to know you're fully covered, then that's why my plan would work best. So my question to you, now this is the trial close here. Out of these three options here, term that cancels, guaranteed acceptance that does not cover you, and then my coverage is just full first day coverage, rates never go up, can never be canceled, which one works best for you?
Option 3.
Option 3. And that's a great choice. So what do you like about it best?
I like that you asked that a little deeper. I like that it doesn't end.
So you never outlive it, that kind of thing.
Yeah, it's always with me.
Yeah, that's what basically everybody says. I mean, why would you choose the other ones? You're crazy to take a plan knowingly to cover final expenses when we don't know we're going to die. Everybody wants peace of mind, right? They want certainty. So off script, sometimes I hear from people, it's like, I know people watching like, Dave, why are you asking them questions you already know the answer to? Those are dumb questions. They're thinking like, well, of course I like yours better. What do you think, I'm an idiot? That's how I would react.
Right.
But the reason we do that is we want them to admit they want it.
Yes.
It's not enough to assume it. I want to hear it from them. I like it because of this, because it never ends. I like yours. I want them to tell me they want it. Because them hearing themselves say they want it and agree that they need it is the way that you get them fully on board and committed.
Hey, if you enjoyed this, I got another one you're going to love. It's right there. Click on it. See you in there.
Welcome back to the CA Power Players Podcast. We've have the Mr. David Duford back in Springfield Mo in the studio. Dave, welcome back to the
Greetings and salutations.
Dude, I love spending time with you, man.
Well, thank you. I do too.
Really do.
It's fun. You're such a great host.